Hi, my name is Richard Purnell from the Mortgage Home, and we are your buy-to-let mortgage experts. In this video, I want to talk about the very recent Bank of England rate reduction. That was on Thursday, the 8th of May. I'm recording this on the 12th of May. So it's our reaction as advisors. And in particular, what I'm being asked is, are those rate reductions going to be passed on? Before I get into the detail and answer that question, if you haven't done already, would you please subscribe to our channel? That means we give you a little tap on the shoulder every time we drop a video, and then you don't miss a thing. And some of these things, like this one, is time sensitive. So, of course, you'll want to be straight on it. Okay, let's get on with it. So, last Thursday, the 8th of May, the Bank of England met again. And there was pretty widely predicted there was going to be a rate cut. It was 0.25%. It's the third rate cut now in succession. So we're getting some momentum, which is great. The committee itself, made up of 9 people, 7 out of the 9 wanted a rate cut, which of course is really favourable. Only 2 wanted to pause. And I think that was a little bit about what's happening across the water. But interestingly, 2 of the 7 that voted for a rate drop wanted a 0.5% drop. So there's definitely momentum on our side. And I'll come to my prediction about further rate cuts shortly. Now, who are the immediate beneficiaries of this? Now, there's 2 camps. You've got people on trackers. And by tracker, I mean tracking the Bank of England rate, which means you get the benefit straight away. The savings going to be in your pocket. You're going to be getting that letter out in the post from the lender. Some really good news. Happy days. Now, with those of you that are on standard variable rate, I'm a little concerned for those people that are on it, because there's very few, in my opinion, legitimate reasons why you should be on SVR. Now, of course, if you're going to be selling your property later this year, you don't want to get locked into another deal and then pay high redemption penalties. Totally get that. But if you've got other pertinent reasons why you're on SVR, I'd love to hear it. Just drop it in the comment below so that I understand what your mindset is why you're on SVR. And in particular, if you're thinking, I'm stuck on there, I can't get onto another deal, I got declined, I've got some skeleton in the cupboard, whatever it happens to be, then please, please, please don't just make any assumptions or even get a second opinion. Below the video in the comment section is a link to our diary. Book some time in. It's totally free, no obligation. What have you got to lose? A little bit of time. And you never know, we might be able to get you off SVR and onto that new lower rate. Now, in terms of predictions, inflation is the big metric that the Bank of England are always have one eye on, because they're trying to use interest rates as a blunt instrument to manage inflation. And it's at 2.6%. It's predicted to go up. But the Bank of England understand why it's going up. And they reckon it'll top out at about 3.5%. Energy prices are the big thing. And we know about this. We've talked about this multiple times. So, and the Bank of England do then expect it to drop back down. And within 2 years, it will have dropped back down below the 2.6 and hit that 2% target. So I think they feel at this point in time, fairly relaxed. We've obviously had the trade deal with India. We had the trade deal with the United States. So it does feel, I mean, this could be the kiss of death. There's some calmer waters ahead of us now, which means that I would expect at least another 2 rate drops this year. Again, I don't think they're going to get too excited. I think they'll be 0.25% each time. If we get 3, I think that'll be a bonus by the time we get to the end of 2025. Now, the big question, are lenders passing them on? Well, yes, they are, because I think the ducks are lining up really for confidence in the markets. Swap rates are down. Inflation, although it's taking around that 2.5%, 3.5%, we're not expecting it to go exponential. Remember, only a year ago it was at double figures. So yeah, lenders are passing it on. In fact, they were so keen to pass on the savings, they were doing it before the meeting of last Thursday. And more lenders have continued to do that since the back end of last week. We're getting emails in our inbox every single day with products being refreshed and the new rates dropping, with anything from 0.1 to about 0.3% being passed on. So really good news. So here's the thing. My last message to you is, if you had some research done in the last, week, 10 days, 2 weeks ago, and you haven't yet acted on it, please come back to your broker, ask them to refresh it. in my opinion, it's likely, probably highly likely, that there's now some improved rates for you. So please don't making those decisions on old figures, or in fact you thought it wasn't worth it, or it was a bit marginal. Now it's worth getting your broker to refresh that. So I hope that's been of use to you. Have a great day.